What do you think happens to your old phone, your plastic water bottle, or the batteries in your remote once you throw them away? Most people never think about it again. But somewhere in India, that garbage is turning into a real fast growing stock market business. Here's a number for you to understand the scale of it. India throws away 1.59 lakh tons of garbage every single day. Now picture this, if you had to load just one day of that garbage onto a train on a real Indian Railways train, you'd need about 2,650 wagons. You know how long does that make the train? 40 kilometers long. Longer than most of the cities. That's the scale of the problem we are dealing with. But here's the flip side. When there's a mountain of a problem this big, there's usually serious money to be made solving it. So we spend time actually digging into this. Not this, but the opportunity at hand. To understand how big this business really is and who's making real money from it. And this is exactly what we are going to cover in this video. We'll talk about the global market size, India's own waste problem, how big it is today and how much bigger it can get till 2030. 4 listed companies that are quietly building real businesses on top of this garbage crisis. I'll walk you through what they actually do, their scale, their revenue, margins, growth and valuation. Then we'll zoom out and talk about what's forcing this entire industry to grow and why it changes everything for these companies. And finally, the real risks in this sector. So let's get started. Now, before we jump to Indian companies, let's answer the obvious question. Is recycling actually a good business, or is this just a sustainability buzzword with no real profit behind it? Let's check globally first because the world has already run this experiment. Normally, when people think safe, boring, defensive stock, they think FMCG or pharma. But it turns out waste management companies behave exactly the same way. And honestly, it makes total sense. Garbage is just a side effect of us buying and using stuff. As long as people keep shopping, eating and throwing things away, this business keeps running. Recession or no recession. Let me show you the actual numbers of the real global waste management companies. Waste Management Inc. grew revenue from $13.6 billion to nearly $19.7 billion in just 6 years. Republic Services went from $9.3 billion to $13.5 billion. Clean Harbors literally doubled its revenue. And even during COVID, when the entire world shut down, these companies barely blinked. Because people don't stop throwing things away just because there's a pandemic. Now here's the part that should really wake you up. What did the stock prices do over the last 10 years? Waste Management up 4,000%. Republic Services up 1,100%. Clean Harbors up over 40,000%. A garbage company up 40,000%. So yes, globally, this boring garbage business has quietly made people very rich. Now let's see if India is setting up the same story. Look, India's population just crossed 145 crore. That's a lot of people buying a lot of stuff and throwing away a lot of stuff. Now add up that daily 1.59 lakh tons over a full year. And you get roughly 62 million tons of waste every year. Plastic, e-waste, hazardous waste, biomedical waste, all of it. Now recycling is taking that waste and turning it back into something usable. Old plastic becomes new plastic, e-waste gives up gold, silver, copper. Dirty water gets cleaned and reused. Basically, garbage becomes tomorrow's raw material instead of sitting in a landfill. But here's the real problem. Out of that 62 million tons, only 43 million tons even gets collected properly. And out of that, only 12 million tons actually gets treated the right way. The rest goes straight into the landfills. And it's only getting worse. The government's own pollution board says India's waste could reach 165 million tons by 2030. And what about the business opportunity? Well, the market for handling all of this, India's waste management market, is worth about 1.3 lakh crore today and it's expected to grow to 1.8 lakh crore by 2030. That's a solid 7.2% growth rate every year. Okay, so this is the size of the problem. Now let's talk about who's actually making money solving it. Let's get into the 4 biggest stocks in this space. Stock number 1 is in the e-waste space. Basically your old phones, laptops, chargers and batteries. Now here's the scale of the problem. India is now the 4th largest e-waste generator in the world, contributing about 7% of all global e-waste. In 2024, we generated roughly 6.2 million tons of e-waste, more than double what it was a few years ago. By 2030, that number is expected to touch 14 million tons. Now here's the part that should shock you. Even with this much e-waste piling up, only 22% of it gets recycled by proper organized companies. The remaining 78% is handled by informal, unorganized scrap dealers, often melting things down unsafely with zero environmental control and no data security either. This gap is exactly where Ecoreco operates. It's one of India's first organized e-waste recycling companies running since 2005. And its business model covers the entire chain, collecting e-waste, safely disposing of it, destroying sensitive data, recycling old lamps, and helping big companies stay compliant with recycling laws. From this waste, it also recovers genuinely valuable metals, gold, silver, copper, and aluminium, which is where really the profit sits in this business. Now let's look at the business numbers. Ecoreco's current recycling capacity stands at around 31,200 tons per year, and it's also built out capacity for lithium-ion battery recycling, which is a category that's only going to grow as India goes electric. The company already has a footprint in 120 plus countries and serves 500 plus clients. Now the financials, and this is where it gets interesting. Total income grew from 21 crore in FY23 to an estimated 53 crore in FY26. That's a company more than doubling in 3 years. EBITDA margin, meaning how much operating profit it keeps from every rupee of revenue, sits at a strong 60% plus, which is genuinely high for any manufacturing-linked business. Profit, meanwhile, jumped from 6 crore to an estimated 23 crore. The stock currently trades around 478 rupees with a market cap of close to 900 crore rupees. Now zoom out to the market opportunity. India's e-waste recycling market is worth 13,900 crore today and could grow to 24,400 crore by 2033. Now let's move on to stock number 2, which takes us away from garbage completely and into something even more essential: water. Around 2.1 billion people globally still don't have access to safe drinking water, and clean fresh water is becoming scarcer every year. That's why governments across the world are throwing serious money at this problem. In India alone, the Jal Jeevan mission is investing roughly 8.7 lakh crore into water infra. Saudi Arabia, several African nations, and other emerging economies are also scaling up desalination and wastewater treatment aggressively. VA Tech Wabag is a pure play water technology company which is built entirely around this opportunity. Desalination, which is basically turning seawater into drinking water, wastewater treatment, water recycling, sludge treatment, and industrial water solutions. In terms of scale, the company operates in 25 plus countries, has executed over 1,500 plants, and claims to have impacted 96 million plus lives. Its client list is genuinely impressive too. Beyond municipal projects, it works with industrial giants like Reliance, IOCL, BPCL, GAIL, and ONGC, plus global institutions like the World Bank, the Asian Development Bank, and JICA. Now here's the number that matters most for an investor: its order book. Wabag's order book stands at over 17,000 crore, which is roughly 4 times its current annual revenue. That gives you serious visibility into the future earnings. For FY26, the company is guiding for revenue of around 3,900 crore, growing at nearly 20% with an EBITDA margin of 13 to 15%. Its balance sheet is also clean, net cash of around 950 crore, very low debt, and a business model that's asset light. Now zoom out to the bigger picture. The global water treatment market is expected to be worth $75 to $100 billion over the next 5 to 7 years. And think about who needs treated water going forward. Desalination plants, data centers, semiconductor factories, green hydrogen plants, and AI infra. Every single one of these is a massive consumer of clean water. The stock is trading around 1,500 rupees with a market cap of nearly 9,300 crore. It trades at a PE ratio of roughly 25 times, has a strong ROC of 21%, profit growth of nearly 29%, and a debt to equity ratio of just 0.09, which means almost no debt. Now let's move on to our third stock, which is the most diversified of all, and honestly it's one of the most interesting business models in this space. Gravita India recycles lead, aluminium, plastic, rubber, and lithium-ion batteries, and it's now expanding aggressively into copper too. But here's what makes it different from a typical scrap dealer. Gravita doesn't just collect waste and sell it forward. It processes this industrial waste into finished, value-added products like customized lead alloys, aluminium alloys, plastic granules, and copper sheets, and sells these directly to industrial customers. That extra processing step is exactly what gives Gravita stronger margins than someone just trading in raw scrap. Let's talk about scale. Gravita runs 14 manufacturing plants, has 2200 plus touch points globally, and its production capacity has already crossed 4 lakh tons. Management isn't slowing down either. They want to nearly double this to 8 lakh tons by FY29. Its customer reach is wide too, 250 plus domestic customers spread across 22 Indian states plus a presence in 25 countries overseas. Now here's an important structural point that most people miss. This industry isn't just easy to walk into. You need import licenses, approvals from big original equipment manufacturers, a reliable scrap sourcing network, and years of recycling know-how. All of this takes real time to build, which is exactly why an established player like Gravita has a genuine head start. Now here's where the growth story gets even more interesting. Gravita recently acquired a company called RMIL to enter copper recycling. This move does three things. It expands the company beyond just lead, improves how much of its own supply chain it controls, and gets into higher margin segments. On top of that, Gravita is also quietly piloting lithium-ion battery recycling. And here's the key detail. This isn't even included in the company's FY29 growth guidance yet. Which means if this scales up successfully, there's genuine hidden upside that the current numbers don't even account for. Financially, the growth has been strong and consistent. Over the last 5 years, revenue has grown at a CAGR of around 25%, while profit has grown even faster at nearly 48% CAGR. For FY26, revenue is estimated at around 4,265 crore with a steady EBITDA margin of around 9 to 10%. The stock is trading around 1680 rupees with a market cap near 12,400 crore rupees. It trades at a PE of roughly 33, ROC of around 17% and a debt to equity ratio of around 0.3. Now let's move on to our fourth stock, which takes us into a metal that's becoming the backbone of almost everything today, copper. Think about EVs, renewable energy, data centers, power infra, AI. Everything needs copper. This is exactly where Jain Resource Recycling sits. It's one of India's largest organized businesses recycling non-ferrous metals, meaning metals other than iron and steel, mainly copper along with lead, aluminium and plastic scrap. And here's what's impressive. Its sourcing network spans over 120 countries. In fact, nearly 62% of its revenue comes from exports, which tells you it's not just good at sourcing raw materials globally, it's equally good at selling to global markets too. But here's what makes this stock genuinely interesting. The company isn't happy staying at the bottom of the value chain, it's moving up. Instead of just processing scrap and selling it as is, it's now manufacturing copper anodes, cathodes, wire rods and bus bars. These are more refined, finished copper products that companies actually need directly, and they come with better pricing and stronger, longer-term customer relationships. Now, copper anode production has already started, and the rest of these projects are expected to go live in phases through FY27. On top of that, there is a lot happening in the background to secure its future growth. Now let's get into the numbers. FY26 revenue grew 48% year-on-year to 9,543 crore, driven by a 26.5% jump in volumes plus better pricing. EBITDA grew even faster at 53% with margins expanding to 5.9%. And profit or PAT grew 56% to 347 crore. Capital efficiency is strong too. But yes, there is one thing you should know about. Last quarter, copper margins compressed a bit, and management explained this was largely due to two temporary factors, one a sharp rally in global copper and second geopolitical tension. The company says both issues are already normalizing and it's also revised its pricing and hedging approach to reduce the impact. Management is expecting lead volumes to grow 10 to 15%. So now you know the 4 top stocks in this space. But here's the real question every investor should ask. Why is this all picking up pace right now? What has actually changed? The honest answer is government pressure. Programs like Swachh Bharat Mission, Solid Waste Management Rules, then Battery Waste Management Rules and the Smart Cities Mission are all pushing this industry forward at a policy level. But the single biggest driver is a rule called EPR or Extended Producer Responsibility. Let me simplify this for you. If a company manufactures batteries, it's now legally the company's responsibility to collect and recycle those batteries once the customers are done using them. The same rule applies to plastic packaging and electronics. In simple terms, companies can no longer just sell you a product and walk away. They are now responsible for what happens to it after you throw it away. Non-compliance with this can mean penalties of up to 1 crore or a complete shutdown of operations. This is really the engine quietly running under everything we just discussed. Strong policy plus smart, prepared companies is what's turning garbage into a genuine investable business opportunity. Now let's talk about what could go wrong here. Risk number one, most people simply don't know what's recyclable. A lot of consumers don't still know which plastic can be recycled and which can't. So recyclable material ends up mixed with regular household waste, making the entire separation and processing job harder and more expensive than it needs to be. Risk number two, not all plastic is equally recyclable. Only certain types like PET and HDPE, the kind used in water bottles, can actually be recycled efficiently. A lot of other plastics are technically very difficult and often commercially unviable to recycle. Risk number three, sometimes recycling is genuinely more expensive than not recycling. Virgin plastic, which is the plastic made fresh from crude oil, is often cheaper to produce than recycled plastic. In some cases, recycled plastic can cost 20 to 40% more. This means the demand for recycled materials depends heavily on government regulations and not just pure market economics. Now, risk number four. Right now, this whole sector is getting a strong tailwind from EPR norms, ESG mandates, and sustainability regulations. But policies aren't permanent. If enforcement slows down in the future or incentives get reduced, growth and profitability for these companies could take a real hit. Now, let's bring all of this together. We use the word recycling almost every day without really thinking about it. But over the next few years, this could quietly become one of India's biggest growth industries, not because it's trendy, but because the numbers, the policy, and the global proof all point in the same direction. And these are the 4 Indian companies already playing well in this space. But one thing I want you to remember from this entire video is, this industry works when 3 things align: strong policy, real demand for recycled material, and companies that execute well. Watch all 3 and not just the stock price. If this video actually helped you understand the space better, do like, share it with someone who invests, and subscribe if this is your first time here. And I want to know which industry should we break down next. Drop it in the comments and I'll see you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.